Hey everybody, Boris, Forex. Welcome to the COM Dollar Technicals for July 24th to July 28th for Aussie dollar, dollar CAD, and Kiwi dollar. And it's been a really interesting week. It's what a turn of events in the COM dollar land that it's been, as the Aussie completely reversed huge amount of its gains, with the RBA basically going from hawkish to dovish in a single week. I think the market really misinterpreted the RBA notes, the RBA minutes midweek, thinking that they were really comfortable in targeting a 3.5% ultimate rate as their neutral rate. And then, of course, the bell came out and pretty much poured cold water on the idea that the RBA is thinking of tightening policy anytime soon. And that created a massive reversal in the trade, despite the fact that data in Australia continues to be relatively good. And certainly the RBA is definitely going to be neutral for the near term. But the story here was that the RBA perhaps was going to join the BOC into the tightening land. And so far, the evidence is scant at best that they're really thinking that way. They're staying relatively neutral. Let's take a look at the calendar first, and then we'll get to the levels. So on the Aussie side, what's going to be fascinating and could probably again prove even further negative Aussie trade is the CPI data. Because obviously if CPI comes in more muted than the market expects, and given the fact that we have lower consumer inflation expectations, we think it's going to be more muted. That's only going to make the RBA's jobs easier to maintain neutral stance and not really any kind of tightening position. And that creates, I think, even more downside action for the Aussie as the week continues. So the rejection off the 80, definitely there. Now, having said this, if we have a shockingly, surprisingly hot number, if the number comes in like, I don't know, I don't think that we have the expectations here so far, but let's say if the number comes in, 220 or 230 on a year-to-year basis, anywhere above the 2% rate, significantly above 2% rate, that could completely reverse expectations, because that really would put the pressure on the RBA, and we could be headed right back to 80. So in some ways, this could be a very seminal event for the Aussie this week. Although our call so far is it's going to be a tilt to the negative side as far as things go. Elsewhere in COM dollar land, not much. We have Kiwi trade balance, which looking to be a little bit negative because we had a drop in manufacturing PMI. But trade balance in Kiwi land, it's like one airplane could flip the whole thing from positive to negative. So it's such a small number sometimes that the market tends to take it with a grain of salt. Generally, the New Zealand economy has been relatively strong, still remains the preeminent carry trade, and has shown quite a lot of relative strength this week. So price action-wise, you have to really respect the Kiwi as it comes into the week. It's one of my more interesting and favorite trades. Elsewhere, at the end of the week, we have the Canadian GDP numbers, which should be interesting because Canada has really been on a bull run from a very, very hawkish monetary stance. Although the general data hasn't been horrible, but hasn't been great. We've had weaker trade balance and retail data so far to Canada, so we're calling for a smaller GDP number. But still, even if the print is sort of like within 10 basis points of the expectation, I don't know how much it's going to hurt the loonie. Loonie has just been on a one-way machine, although it's coming into some very, very key support and resistance levels. Which brings me now to the levels, which I think are kind of very interesting as we start the week. So obviously, for Aussie, 80 is the ceiling, right? We tried to kind of tease it after Australian employment this week. Didn't happen. Now 78 is pretty serious support. And this is actually going to be, to me, if the CPI is weak, it's really going to be a big tell just how well the 78 can hold amidst a weak CPI number. Caddy has been a monster. And if you look at the loonie, it's been by far the strongest commodity pair. At this point, the 125 is certainly very much in the sight of the shorts, but as I said, a couple of things really have to go its way. You have to have more hawkish commentary from the BOC, which I think at this point may not be necessary because they've pretty much gotten where they want to go. There's been a significant tightening already as far as currency trading going on. So I don't know if they really want to kind of jump on the beat up the guy while he's down at this point. And on the other hand, we need more supportive data on the data front, and that's really not going to come till the end of the week. So unless oil prices really begin to skyrocket and we have a move through the 50, which will certainly create a big trigger to run the 125 stops. That 125 stop is a very significant stop. I think it's going to be a lot of buy orders in front of it. It's going to be hard to break it this week. So CAD, after multi-week moves here, could find a little bit of a slowdown as we go forward. And Kiwi came in, closed out the week very strong, and now really stands within striking distance of the 75 figure, which you got to like, because it's a very magnetic figure as far as the longs go, and they're certainly going to want to try and run it. So let's take a look at the charts here and just see how everything sets up. So if you look at the Aussie on the weeklies, it still looks relatively healthy, but we clearly had a big rejection off the 80. And although we cleared all this resistance around the 78s, it's very feasible that we can come back and retest the 78s. In many ways, Aussie is really going to be more of a fundamental trade than a technical trade at this point, because we don't have too much technical resistance until really 81. And it's really going to be a function of the CPI data and just how the market feels about the RBA intentions going forward. So if the Aussie curve begins to compress a little bit, that's certainly going to put pressure on the currency and bring it right back down towards the 78s. On the CAD side, there is actually quite a lot of technical movement here, right? So we've had this huge amount of momentum, just massive amount of momentum, almost 9-10 weeks of just uninterrupted downside movement. We are now 25.40. We're within 40 points of the support level. Are they going to take out the 25s? Certainly, they're going to want to test it, but whether it falls through like a hot knife through butter, I think, is a completely different story. Now, we did break the support here with pretty significant and fast movement. This was the 2650 support, right? So now the only thing that's really left here is the 2460, which is, let's say, 2450 support as the final support. I think that's going to be a little bit harder to break. I think 24 is going to be a much harder level to hold, and probably if you're going to want to build sort of counter trend speculative positions, now is as good a time as any to begin to inventory positions against a 24 stop to see if there's any kind of potential bounce going on here in the caddy. And Kiwi goes the other way. Kiwi really making this very strong power move at the end of the week. We close on the highs. We are within 50 points of the striking distance of the 75. We're not even 50 points. I think the high here was what, 70? We didn't quite make 75s. We made 74.85. So that's very tempting. I mean, they're going to really want to try to run this, and once they get closed, certainly going to the battle to run the 75 stops is going to be very, very active. So any kind of a positive flow, sort of, I think in many ways, this will be the interesting trade if the market feels negative U.S. right? If Yellen, if there's any kind of a dovish hint out of the FOMC announcement this Friday, who's going to be the biggest beneficiary? It'll be the carry trade out of the Kiwi, and that's going to be the big trade here as we try to move through the 75s. So that's how it goes. The COM dollars are certainly going to be no longer a secondary trade. They've become primary trade over the last couple of weeks. Really quite a lot of action here. Definitely worth trading, although the stories for each one of them is quite different. So it makes it very interesting and very nuanced and unique trading as we go forward. As I said, 75 looks very doable in Kiwi. 125, 24.50 looks like a pretty serious support in dollar CAD. And with the Aussie, it's really a slip back towards 78 if we get very weak CPI numbers. Wish you guys the best luck, the best trading. Boris, over and out.